Hey future millionaires, in this video we're going to go over 401k, and this time around we're going to focus on index funds. We're going to help prove that even in a 401k there's an opportunity to build some serious wealth. So in this video we're going to focus on 4 individual index funds, or 4 individual options. 3 of them in this case are actually index funds, and then from there we're going to take a look at what it would look like if you invested consistently in these 4 funds over a 5-year period and then a 10-year period. Before we jump into that review, please take a moment to like, subscribe, and share. This helps the video go out to more individuals who are interested in this type of content. And that's overall our goal here, is to reach out to as many people as possible to show them the opportunities that lay within their own 401k, and to hopefully inspire them to take action to achieve their financial goals. Let's jump into this 401k review. In this review, we will look at mutual funds and how to buy them. Hopping into this 401k, we currently have 31 different options of mutual funds. 3 foreign, 2 in the bond classification, 4 in the large, 4 in mid-cap, 1 in moderate allocation, 1 in real estate, 2 in small value, and finally 14 different ones in target. But to make this reasonable, we're going to focus on just 4 of them. And those 4 are 3 of them that are index funds, 2 with Fidelity, 1 with Vanguard, and then finally our last one is closer to a traditional mutual fund, which is a small cap with Fidelity. So we have a good mix of opportunities here to review, and this is going to be a fun review. So what are mutual funds? Mutual funds are a type of investment that are a portfolio or a large group of stocks or bonds or other securities. Mutual funds are commonly diversified within a certain group or sector, and they are professionally managed. So these groups or portfolios are professionally managed. Mutual funds are divided into many categories. Those categories can be from small cap to large cap to mid cap, then even sector, and then even international, where basically for us in the US, international would mean it would be a large amount of stocks that are companies that are led outside of the US. Now let's do a quick rundown on how to buy mutual funds outside your 401k. Should you be interested after you're doing a review of your own 401k? It really comes down to about a 4-step process. First, determine the type of account that you're going to buy it in, whether it be an IRA or a brokerage account. Then second, you open an account with an investment broker. So that could be Fidelity, Charles Schwab, Vanguard, etc. There's so many firms out there. Do your own research. Then from there, decide on how frequently you're going to invest, weekly, bi-weekly, or monthly. Quick pro tip: try to invest with the same frequency as your paychecks. You're paid weekly, invest weekly if your budget can support it. Bi-weekly if your budget can support it. Then from there, make this automatic. Automatic transfers out of your bank account to your investment broker, and then automatic purchases of your mutual funds or ETFs, whatever you're trying to invest in. And again, most employer accounts only consist of mutual funds. In this mutual fund review, we will review the category of the fund description, the sector and weighting, shareholder information, expenses and fees, recap, total holdings, and the fund performance for each fund. First on deck, we have the Fidelity Total Market Index Fund. What we have here is a large blend, so a large cap blended fund that started in September of 2011. This fund focuses on at least 80% of its assets on common stocks that are in the Dow Jones Total Market Index. So that's what you get with an index fund. It'll give you its comparison. Okay, now let's jump into the holdings. Some highlights here. You got Apple, Microsoft, Nvidia, Alphabet Class A, Alphabet Class C, and Meta, and Berkshire Hathaway, and then Rivian. But let's just call it out. An index fund is going to have a lot of holdings. How many? In this case, you've got 3,935 holdings. So this fund has you invested in 3,900 different positions, mostly stocks. And then what is the allocation? Mostly large cap. Just like it calls out, you've got about 37.8 in large growth and then 22 in large value. Other highlights would include a small value of about 12.7. Okay, what sectors do you get with this fund? You get about 35-ish% in technology, 15 in finance, around 9 in industrial cyclicals, non-durables, retail trade, health, energy, consumer durabilities, utilities, and then services. This fund, again, has been around since September of 2011. No minimum investment, so the minimum investment is really low. Subsequent investments are zero, and minimum for the IRA is zero. So this is one of those funds that I like to call out. I go over this because sometimes we look at a fund in our 401k and we're like, wow, this is just performing so well. I like the position. I want to invest in this. So I'm giving you the opportunity to see what this one has. And if you want to invest it on your own, you've got all the stats to know that what it takes to get into this fund. Now let's move into what's the expense ratio. This one has a 0.02. So for every $10,000, you would have about $2 in expenses. Now let's move into the performance. You've got a 1 year of 14.79, 3 year of 9.7, 5 year of 10.13, and then a 10 year of 12.6. And that's what you get with the Fidelity Total Market Index Fund. Next up, we're going over the Fidelity Extended Market Index. This one goes by the ticker symbol of FXMAX, so FS Max, FSMAX. This one is a mid-cap blend. This one's been around since September of 2011. 80% of its assets are of U.S. Stocks, with a focus on mid to small size capitalization, but mostly mid. Now let's do a quick recap of what do you get in this fund. Top holdings include Uber, Palo Alto Networks, Blackstone Group, Marvell Technology, Snowflake, Airbnb, Workday, and Lululemon. Allocation on this one, you've got roughly 11% evenly on growth, and then another 11% on large value. And then the broad majority here is small of 32%, small growth, and then small value of 23%. So between those two, you get over 50%. And that's why they call this one a blended. And then you've got some foreign and then some emerging markets. But as you can see, it's widely dominant in the U.S. And widely dominant in small. Total holdings include 3,625 different positions in securities. And now let's talk about what do you get with this index fund. You get about 22% in technology, another 18 rounded up percent in finance, about 13% rounded up in industrial cyclicals, around 10 in other, and then about 9 in health, retail trade, non-durable, services, consumer discretionary, energy, and utilities. And like I said before, this fund's been around since around September of 2011. Initial investments currently set to zero. Subsequent investments is set to zero. And minimum IRA is set to zero. So what this really means is you don't have a big threshold to get in. So zero, you could invest as little as $1 to get into this on your own. So as we review, the expense ratio is 0.04. So that means for every $10,000, you'd have $4 in expenses per year for this fund. Now, what do you get for all that in performance? Let's go over it. So your performance year 1 year is 8.3%, 3 year is 5.37, 5 year 5.18, and 10 year is 9.08. All that in one index fund. Now, this will be our final index fund for this review. To round it out, this one we have the Vanguard Total International Stock Index Fund. This is an international large blend. This fund started in November of 2010. Vanguard Total Investment Fund is focused on performing against the FTSE All Global Caps U.S. Index Index. Jumping into some of those big positions in this fund, you've got a position in cash, Taiwan Semiconductors, Nestle, Tencent Holdings, Novo Nordisk, ASML Holdings, Samsung, and Roche Holdings. Allocations, so sectors that we're in, you got a small position in large value, and then about 68% in foreign stocks. So perfect. And then another 25% in emerging markets. So between the two, you are basically the whole entire fund. So well over 90% between those two sectors. So it's living up to its name. And then this is the big bad boy of all of our funds today that we reviewed in terms of holdings. You have over 7,000 positions. So this index fund, you have holdings in 7,800 different companies. one more time, let's look at the breakdown of where this fund is. Because it's international, I thought it'd be important to really highlight it. In this case, you've got 40% in Europe, another 25% in emerging market, and then the Pacific area has about 27%. So again, very little in the U.S. and a very small position in North America. That's likely a combination of Canada and Mexico. This fund has been around since November of 2010, and the minimum investment on this one is $5 million. So first off, this is very likely an investment grade fund, investor grade fund. So only institutions can invest in this, or in this case, 401k participants. I will note that there is an ETF equivalent of this mutual fund that has a $1 minimum investment. So again, the minimum investment on this one is a mere $5 million. So, when you just want to invest $5 million in something, here you go. And then from there, subsequent investment is $1. And then your minimum in an IRA is $0. So again, they've really kind of put the bar really high on this one. But I want to call out there is a ETF equivalent. Okay, the expense ratio on this one is a 0.08. So that means for every $10,000 you have invested, your expenses are $8. What are our returns? So the 1 year is 12.15, 3 year is 4.38, 5 year is 3.52, and 10 year is 4.69. But again, you know what? I've got to say this. Aside from that crazy high minimum investment of $5 million, it's actually really impressive that you can get over 7,000 positions in one fund for a mere cost of 0.08. Okay, rounding out our review, we're going to look at a Fidelity small cap value. This one is in the fund category of a small cap value. The fund has been around since November of 2004. Normally invests 80% of its assets and securities in a small market capitalization, primarily from two indexes, either the Russell 2000 or the S&P Cap 600 index. Okay, so as I said, this is not an index fund. This is more of a traditional mutual fund. So in this case, you have your top 10 holdings. You got a money market position, Tempur Sealy International, KB Home, First Cash Holdings, Scientific Games Corp, Univar Solutions, Brookfield Infrastructure, and U.S. Foods Holding. And in this one, you have 94 holdings, so 94 sector positions, compared to all three of the index funds were 3,000 and up. And again, that international had 7,000, over 7,000 holdings. And as we can see, in terms of allocation by sector, your small value is dominating at 6.85. Second up is, in terms of total percentage, is large value. And for this one, let's talk about the allocation by sector. You've got about 30% in finance, other about 12.6%, industrials 11.43%, and technology at 10.23%. And our last two I'll read out because they're above 9%. Retail trade, and then consumer durables. Let's talk about, again, the shareholder information. This one, you've got started in November of 2004, minimum investment about $0. So that means, again, you can get into this one for pretty cheap, probably $1. And then minimum investment on the IRA is $0. So again, $1. Then from there, you have the ability to invest into it automatically as well. Okay, now your expense ratio on this one is a bit high. Actually, it's 1.02. So that means for every $10,000, your expenses would be $102. Compared to the other ones where they were 0.02 and 0.04 and then 0.08, this one's actually really high in comparison. Let's see what the performance looks like. Your 1 year, 8.76, 3 year, 18.72, 5 year, 7.26, and 10 year of 9.24. Next up, we're going to have some fun. We're going to take a look at what it would look like if you invested consistently in all four of these funds for 5 years on an even spread. Okay, now we're going to have some fun, and we're going to look at all four funds in our spreadsheet. We're going to do a projection of what this account could have looked like. But as a reminder, past performance is not a guarantee of future performance. So again, this is just hypothetical. We're taking all of our past performance and saying, okay, what could have occurred. So as a reminder, our 3 funds today, you have 3 of them that are index funds, and then one that is a traditional mutual fund. Returns scaling from on the 5-year low of 3.52, high of 10.3. Then on the 10-year, you have the low of 4.69, and then the high of a 12.16. Now, as a reminder, we're going to go for a full simulation, and in this case, we're going to invest 6%, and then the employer is the 3% match, as I'm told by the person I worked with, and we're going to see what the returns would be like for 5 years. Whoa, 54,000, roughly 55,000. Okay, now let's walk through that breakdown. Your 55,000 would have been composed of about 30,000 employed contributed by the employee, and then growth of about 6,500 on that, and then you had an employer match of 15,000, and then that growth on that employer match would have been about 3,000, and that's how your 55,000 would have been broken down. Now we'll switch to look at what it would look like if you did the 10 years. All right. After 10 years of investing consistently, you would have had 149,000. All right, let's see how this breaks down. So 60,000 would have been what you contributed as an employee, making about 40% of the balance. And then you would have had close to 39,000, a little over 39,000 in growth on your contributions as the employee. And then from there, your employer match would have been 30, and then you would have had enjoyed about 19.6 growth on your employer match. So a total of 149,000. But because I like to play with the numbers and really get deep and do a deep dive here, we're going to see what happens if you max this bad boy out. Okay. In the year 2023, the current employee contribution max is 22,500. So we're going to update our spreadsheet to account for that. All right. And then let's see what it looks like. In 5 years, your balance would have grown to 155,000. So a quick rundown on the breakdown. So you, the employee, would have contributed $112,000. Then from there, your growth on that would have been 24,000. Your employer would have matched 15,000, and you would have had growth of about 3,000 on that. Now let's see what this number jumps up to when we go to 10 years. Wow, look at that. Almost triples, right? You've got a total balance of 422,000. Jumping into it, how is that 422 broken down? First, you have 225,000 of the employee contribution, so you, the employee, contributed that. Growth on that would have been 147,000. So 35% of your balance was just growth on your investment. And then from there, your employer would have given you about $30,000, which makes up about 7% of the balance. And then finally, you would have enjoyed some growth on that $30,000 of roughly 19.6 over a 10-year period of time. I know these numbers are pretty large. I just wanted to show people the opportunities within their own 401k to build some serious wealth. And you don't have to max out to build some serious wealth, but just wanted to show you the scale. As again, starting at the beginning from investing as little as $6,000 all the way up to the full federal match. And so in this case, it is clear to see that this employer is providing some great options that any employee has opportunity to invest in, and they can invest consistently. And if you think about this, in 10 years you did 422. So if you kept doing this at this employer or a very similar employer with these driving factors, it is clear that in 20 years you would definitely be over $1 million in this account. So it is really exciting to show you guys this perspective of what can be done within a 401k. And again, in this case, we had 3 index funds and 1 mutual fund, 1 traditional mutual fund that is, and it has some pretty amazing results. This video is brought to you by Next Chapter Financial Solutions and Services. So please like, subscribe, and share with your friends. If you enjoyed this video, also drop a comment. It is our goal at Next Chapter to provide you with information to help you take action to improve your financial situation. Please check out our links on our Etsy page for printables and files to help you take action. We also offer one-on-one coaching. Our goal is to help our customers determine a clear path to achieving their financial goals. So if this is something you are interested in, please click the link below to contact us. Talk to you soon, and I hope you enjoyed the video.